Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we are tracking for you in the BNN Bloomberg newsroom. Silver has recovered some losses after its biggest one-day drop in more than 5 years. The metal climbed above $74 US an ounce today, following a 9% slide in the previous session. Gold also edging up after its steepest drop in 2 months. Despite the pullback, gold and silver remain on track for their best annual performances since 1979. According to Reuters, China is mandating at least 50% of the equipment that chip makers use for new capacity be made domestically. Reuters is reporting that the rule is not publicly documented, but chip makers have been informed by authorities that they must prove their procurement through tenders. The requirements are relaxed for advanced chip production lines where domestically developed equipment is not fully available. Shares of Meta are rising today. The tech conglomerate has agreed to buy Manus in a deal valued at $2 billion US. Manus is a popular Singapore-based artificial intelligence agent founded in China. The transaction marks a rare acquisition of a U.S. company buying an Asian tech company. A Meta spokesperson has said there will be no continuing Chinese ownership interests, and Manus AI will discontinue its services and operations in China. We are watching shares of Warner Brothers and Paramount today. CNBC is reporting that Warner Brothers is expected to reject Paramount's hostile bid. Streaming giant Paramount offered a $108 billion U.S. bid, along with Oracle's Larry Ellison backing the offer with a personal guarantee. The decision could keep Warner Brothers on track to pursue the rival Netflix deal valued at more than $82 billion U.S. Quick glance at the markets, and you can see the TSX bouncing back again, up in the green, up by about a quarter point after a couple of off days. Maybe we'll see that Santa Claus rally. South of the border, it is mixed right now, almost a wash, really. The S&P 500 pretty much washed. Dow Jones, it's up by down by nearly 0.2%, and the Nasdaq is up ever so slightly. Well, silver has recovered some of its losses after its biggest one-day drop in more than 5 years. The metal climbing above $74 US an ounce today, following a 9% slide in the previous session. Let's get more insight on this from Norman Levine. He's portfolio manager of Brook Wagman Private Wealth Management at Raymond James. And Norman, thanks very much for joining us.
Thanks for having me.
Your thoughts on, it's not even a full week of kind of madness for silver.
Well, we are in what I call the pig stage of the silver market. It's in a bubble. It's going parabolic, and whenever securities or commodities or any type of financial or material asset goes parabolic, they go further and longer than people expect, and then end very, very badly. I've asked your people if they have a 50-year chart of silver so we can show what's happened to silver in the past. It shows on the side on the left where it was coming from. Unfortunately, that's as far as the chart goes. Mm-hmm. But back in 1980, the Nelson Bunker Hunt and his brother cornered the silver market and sent it parabolic high, and then it came crashing down and didn't go anywhere until 2004, 2005, and then again went into a parabolic market at the end that ended in 2010, came crashing down again, went sideways for 10 years, and is now going up again. So this is the way this commodity trades. And the easy money has already been made. We're now in the very very speculative end, and what I call the greater fool theory, because anybody who buys it here has to hope that somebody is crazy enough to pay more than they have so that they can get out at a profit. It's the greater fool theory is what it is, Roger.
Now, some people might say, but it's different this time. Is it? There's
Never
a lot
different this time, Roger. You know?
Now, but there is a lot. I mean, the demand for silver within solar power and electronics and that, there is a demand for it. Is that enough to keep it going?
I don't think so. So part of the problem was that there was a squeeze in silver as traders were worried about Trump tariffs. And so silver was moved to the U.S. and there was a squeeze in in silver warehouses in London. Yes, there is industrial demand for silver, much more than there is for gold. But once you get to certain prices, users start to substitute other materials for silver. So people are only willing to pay so much for industrial use, and then they say, forget about it.
Okay, so stay out of silver is what you're saying right now. What are some options when people can be looking at right now that you're thinking?
So what I'd like to do, I was going to use this as a lead in that commodities in general, especially metals and minerals commodities, are starting to act very well, and they're much earlier in their uptrend phase than gold and silver are. Particularly copper and aluminum have both broken out to new highs, and iron ore is poised to join them, it looks like, very, very shortly. And you get cycles, commodity cycles, and then you get commodity super cycles. And we're in the beginning of a commodity cycle here. Whether it's a super cycle remains to be seen. But to me, the biggest beneficiary of this is Rio Tinto, RIO. It's a British Australian company headquartered mostly in London. You can buy the ADR on New York, and its main products are copper and aluminum and iron ore. So they're benefiting they're the guys who bought, for example, Alcan. They own Alcan. They own Labrador Iron Ore. They're among other properties that they own around the world. So they are very, very well situated. The new president has shown extreme financial discipline, which is something that's very difficult to find in the mining area. In the mining area, especially when prices start going up, CEOs dream of bigger is better as opposed to better is better. And that's the type of company I want to own. The better is better. And that's Rio Tinto.
Okay, and I want to get in one more stock that you're liking right now, because the K-shaped economy, two very different directions depending on who you are, and you're liking Ralph Lauren because of that upper bar on the K.
Yeah, I should preface it by saying it's always difficult to make long-term money in what's called the schmutta market. That's a Yiddish term for rags. And they may be upscale schmuttas, but Ralph Lauren is in the schmutta business, but they are in the right part of that business right now. They're in what's called the near luxury market. So in the K-shaped economy, which is what you're seeing in both Canada and the US, K-shaped means that people who basically own stocks and are making money in stocks feel rich, so they're out there spending. And that's the K going up, the part going up. The part going down in the K is the people who aren't, whose wages are squeezed, who are losing their jobs. They're the ones who are not benefiting this economy. Ralph Lauren mostly sells to those who are aspiring for wealth, aspiring for luxury. And they are in the sweet spot right now. Their styles are in trend. And their sales are every quarter doing better than expected. Their other side, which is their outlet stores, caters not just to those people, but some of the people who are hurting in the K economy, because you can then go to their stores in the outlet malls, buy them marked down, And usually you can get a 30% or 15 or 30% discount. So people are taking advantage of that. So their sales and their earnings keep exceeding expectations, and it looks like it's going to do that for the next year or so. So I think the stock, even though it's come up quite a bit, still has a lot more to go on the upside.
All right, we'll leave it there. Norman, thanks as always for joining us. All the best for the new year.
Thank you. Happy New Year, Roger.
Norman Levine is portfolio manager of Brook Wagman Private Wealth Management at Raymond James. Up next, we'll take a deeper dive into what has driven the historic rally in gold this year and if it's sustainable. Well, gold has surged this year in a record-breaking rally tied in part to eroding confidence in the U.S. dollar. We look at what drove its rise and what it means for the global financial system in this Bloomberg documentary.
Metal is having a moment. Not this kind, though, sadly.
Gold hits another record.
Spot gold prices have climbed above $4,000 an ounce for the first time.
The key word is scared.
During times of economic and political and financial turbulence, you buy the dollar, you buy US Treasuries, you seek safety.
Not so much now. Now you buy gold.
What we're seeing at the moment is not like anything really that we've seen over the last couple of decades.
In October, gold extended its already furious run from last year and showed few signs of abating.
This gold rally really looks unstoppable at this time.
Excitement is evident online, on shopping streets, and in capital markets.
Just gold, gold, gold the whole time.
Chinese mining company Zijin Gold recently raised $3.2 billion in one of the year's biggest IPOs. But it's not just a gold rally. Look at silver. In October, it reached its highest price per ounce in more than 4 decades.
I think it is a warning sign that people are very anxious.
Gold is the ultimate safe haven asset, a heart rate monitor, if you will, the health of the global financial system.
And because of that, when you see a spike in the gold price, your first question should really be what's gone wrong.
Gold is the ultimate precious metal. It's been around since the beginning of time. Gold has seen it all and survived through it all, and it probably will continue to do so.
Because it's reliable, easy to trade, and high value, despite lacking the intrinsic utility of a semiconductor or shipping container full of these things.
Gold has outperformed equities. It's outperformed almost every other asset class if you take your starting point at 2000.
It is the one asset that does very well when the typical parts of your portfolio go down.
It breached $1,000 during the global financial crisis, $2,000 during COVID, and $3,000 after the Trump administration's tariff announcements, which perhaps was a wake-up call.
The dollar for many, many years has been seen as the haven of the market because people trust the U.S. government and they trust dollar assets.
Welcome to 2025.
The dollar is the single biggest decline in 6 months in 50 years. Gold is at record highs.
And here's what that looks like. This gold line, because why would it be any other color, shows how much the metal has increased in value since January. The green line shows the dollar's depreciation over the same period. That discrepancy reflects what's called the debasement trade.
It is the idea that faith and trust in the dollar is no longer what it once was, so you have investors looking at other assets.
People do that trade when they are losing their confidence in traditional government bonds and fiat currencies.
And in that situation, gold becomes quite appealing because there is no counterparty. It's just you and your gold.
It's independent from the government's influence as well.
Which is no longer something investors automatically say about the dollar or the US central bank.
So the Federal Reserve has long been seen as kind of a bulwark of global financial stability. It has cherished independence from the political system in the US. Now the pressure on the Fed from the White House and President Trump has thrown that whole dynamic into question.
Am I allowed to appoint myself at the Fed? I do a much better job than these people.
how sustainable is the Fed's position, given the position that President Trump is taking and given the pressure he's putting on the Fed to lower interest rates.
If the Fed is slashing interest rates all the time,
that makes gold more appealing because, unlike cash, it doesn't actually obviously yield interest. And so when interest rates are lower, gold becomes relatively more appealing. But on the other hand, you have inflation that makes gold appealing as a hedge.
And inflation's back on investors' minds as Trump's tariffs risk driving prices higher around the world.
So that's kind of a heads I win, tails you lose scenario for gold.
Over the summer, the dollar fell to its weakest level in more than 3 years.
While there are different views on what's behind that weakness, the takeaway is that the US isn't seen as the trusted ally it once was.
But to find the source of gold's rally, we need to look back further than Trump's second term. A pivotal moment for the metal was in 2022, after Russia's full-scale invasion of Ukraine.
G7 countries froze the assets of the Russian central bank that were held in Europe.
That caused many countries around the world to think we need to diversify away from the dollar in order to shield ourselves against potential or future US sanctions, or at least getting caught up in the dragnet of those.
And by countries, we're talking central banks, which have been steadily adding to their gold reserves. In the early 2000s, they were selling a few hundred tons into the market every year.
They've flipped that now. They're buying about 1,000 tons a year.
And for the third year in a row in 2024, according to the World Gold Council. China, India, Poland and the Czech Republic have been among the biggest buyers.
China in particular has been probably the most important central bank buying gold over the last couple of years. It's the biggest consumer of gold in the world, it's the biggest producer of gold in the world. Really, gold is a China story.
People's Bank of China is trying to create, or at least help to facilitate, a world that's less dependent on the dollar. And one way of doing that for the PBOC is to reduce holdings of the dollar, such as the US Treasuries, and buy gold instead.
About halfway through the 20th century, the dollar became the world's reserve currency. If you want oil, you use dollars. If you want gold, you use dollars. If you want to exchange currencies, often the dollar sits in the middle of that transaction.
Even most of China's exports are settled in the dollar rather than the yuan.
The dollar made up nearly 3/4 of the world's foreign exchange reserves in 2000, but its share has been slipping since then. Pressure on the Fed, with tariffs, inflation and sanctions in mind, it's prompted trading partners to look at the US and its currency in a different light.
People are concerned with geopolitical tensions, with trade conflicts, and Trump's chaotic tariff policies.
And again feeds the idea that why is the world settling trade in dollars? What alternatives do we have?
Demand for gold's also been boosted by gold-backed exchange-traded funds, or ETFs, which let investors bet on the metal's price without ever holding any.
Maybe they don't have access to buy gold bars or to buy physical gold, but they have this access to ETFs.
September was the biggest month of inflows that we've seen in more than 3 years.
We saw that ETF inflows were 6 times larger than what a rates-based model predicts.
And remember, this trend doesn't just concern the precious metal King Midas once mistakenly transformed a daughter into. Although he shouldn't be that upset, she'd be worth a fortune right now.
Platinum and silver this year have rallied a lot more than gold.
Now there's a nuance that can get lost in the discussion about precious metals other than gold.
They're also useful. They're used in industry, they have real sources of demand. So those markets function a little bit differently than gold, but they tend to do really well when gold does well. It's partly about this debasement theme where people are worried about the ability of many developed economies to pay back their sovereign debts. And because of that, they're looking to other precious metals like platinum, like silver, and they're looking to cryptocurrencies.
Gold and to some degree Bitcoin, they are ways to express an opinion that the system itself is going to have some problems.
When it comes to haven assets, the gold standard remains, well, you know.
This gold rally speaks to the times we are living in.
Not everyone's convinced currencies and bonds are so easily replaceable. A major de-escalation of Trump's tariffs or a peace deal between Russia and Ukraine could also spur a price decline. Volatility is very much still in gold's fine print. Still, Goldman Sachs and Deutsche Bank both say they expect gains to continue for now.
With any rally, it naturally makes people worried. Is this a bubble? Is this going to pop soon? One thing it does have going for it is that the secular trends that have been supporting it over the last few years are still very much there.
It's clearly a very fragile geopolitical moment. Old alliances are being tested, new alliances are being formed, and I think as long as these really steep tensions do persist, then that clamour for safe haven assets such as gold is going to continue.
Coming up, Donald Trump hosted Israel's Prime Minister Benjamin Netanyahu for lunch at Mar-a-Lago yesterday. More on what came out of the meeting. That's next. Amid concerns over a fragile ceasefire in Gaza, the U.S. president yesterday held a high-stakes meeting with Israeli Prime Minister Benjamin Netanyahu. It took place at Mar-a-Lago in Florida and comes as a group of Canadian activists called for sanctions after they were denied entry into the West Bank 2 weeks ago, along with a half dozen MPs. With more on this, here's CTV News' John Benavali-Rao.
Far from Donald Trump's meeting in Florida, in Gaza, displaced Palestinians trying to survive a harsh winter offered mixed opinions about whether the meeting might amount to much. This man saying everyone's exhausted, cold, and urging the U.S. president to get his peace deal moving on to the next stage and eventually reconstruction.
Gaza's a tough place.
Trump and Israeli Prime Minister Benjamin Netanyahu speaking with reporters, saying Gaza was among 5 major subjects to be discussed. Trump said he hoped to move to phase 2 of the ceasefire plan quickly, but adding Hamas must disarm. He also suggested the U.S. would consider further military action against Iran if the country tries to rebuild its nuclear program.
Now I hear that Iran is trying to build up again, and if they are, we're going to have to knock them down. We'll knock them down. We'll knock the hell out of them, but hopefully that's not happening. I heard Iran wants to make a deal.
Meanwhile, in Ottawa, a group of activists held a press conference after they were stopped by Israel at this border crossing 2 weeks ago, trying to enter the occupied West Bank from Jordan. Along with 6 MPs, the group, sponsored by the nonprofit The Canadian Muslim Vote, planned to observe conditions there, but was denied entry for what the Israeli Defense Ministry said were security reasons.
This denial of access is not an isolated incident. It is a small sample of the systematic control and intimidation that Palestinians face every single day under occupation.
The group noting that Israel's security cabinet recently approved the recognition of 19 new settlements in the West Bank, which Canada considers illegal under international law, and calling for sanctions on items that come from them.
Any settlement product that's developed and sold should be barred from Canada.
As for whether that Canadian delegation will try to go back to the West Bank, they said they'd like to, but aren't sure what will happen next. John Benavali-Rao, CTV News, Toronto.
When we come back, we are exploring AI predictions for 2026, from autonomous vehicles, podcasts, and home robots. Don't miss that. That's next. Well, copper is heading for the longest winning run since 2017. The metal's December rally is being powered by the prospect of more stress in the supply chain. Traders have been rushing metal to the U.S. in anticipation of potential tariffs tightening the market for the rest of the world. Futures have rallied by more than 40% this year, setting up the biggest annual advance since 2009. Shares of Frontera Energy are slightly up today. Actually, right now they're down ever so slightly. The energy company has entered into a $120 million prepayment and commercial agreement with Chevron. The Calgary-based company will commit to deliver a portion of its crude oil production for the next 2 years to Chevron. Frontera saying the agreement is replacing an existing prepayment agreement which expires at the end of next month. And we're watching shares of Tesla today. The car maker has published an average of analysts' estimates for vehicle deliveries to its website. By Tesla's count, analysts on average expect a 15% drop from last year in car deliveries in the fourth quarter. While Tesla compiles average delivery estimates, the company hasn't shared the figures on its website in the past. The car maker is on course for its second consecutive decline in annual vehicle sales. And taking a look at the markets right now, you can see the TSX looking to end that little mini losing streak, maybe start the Santa Claus rally, who knows? It's up right now about a quarter point. And south of the border, it's mixed right now, but pretty much a wash. You can see the S&P 500 barely up, Dow Jones off by 0.1, and the NASDAQ up by about 0.1. Okay, we're going to dive into the biggest tech trends that could shape 2026, from autonomous vehicles to home robots to the rise of podcasts in your living room. Joining us all to break it all down is someone who's been tracking these changes closely, Jim Anderson, the CEO of Beacon Software. Jim, thanks very much for joining us.
Good to be here, Roger.
Okay, autonomous vehicles, we've talked about it. We're seeing them, but what can we expect for this year, or 2026, I guess? We're not quite there yet.
Yeah, well, it's interesting. They're scaling, right? We're seeing it in San Francisco. We're seeing Waymo specifically going to new markets. They're in Atlanta, Houston, I believe, Dallas. There are other markets that they've announced. And so we're starting to see the issues, both the benefits and the problems associated with scale. They got a lot of press for the blackout in San Francisco that happened a week or two back. And a whole bunch of Waymos got confused. And it's one thing to have one Waymo that's confused with one or two occupants in it. It's quite another to have 100 Waymos confused and not know what to do when the traffic lights are out. And that highlights a real challenge with these autonomous vehicles, is that they all have a telepresence component, right? There's some place they call into, and there's humans that intervene. We don't know how often those humans intervene, whether they're qualified drivers, what commands they issue to the vehicles. All of that is very opaque right now. And so I think we're going to see both success and the failures and the challenges associated with that scale of autonomous vehicles.
So, but a probable slow but steady increasing of use of them, though.
Clearly, they provide a tremendous benefit. They provide tremendous potential safety improvements. We all know the challenges with human drivers. Although I don't think, again, that when you get 100 Waymos that are confused and don't know what to do with traffic lights that are out, is that a net safety benefit if they're all clogging the intersections? Maybe not, right? So I think we as a society are going to have to learn to deal with these scale problems. And so that's the real issue for 26 is now it's not just a few vehicles on the roads. What happens when we have hundreds or thousands of them? What problems are we going to see? And then how do we overcome those?
All right, let's move on to home robots. We're not going to see the maid from the Jetsons, is what you're saying. And kids, look that whole thing up.
Exactly. I don't think so. I mean, home robots offer as much potential, maybe even more than autonomous vehicles. When we think about aging, our aging parents, elder care, lots of just we'd all love robots to do our chores for us. But are you going to take a 100-pound robot and put it in your home with your children when you're not sure if it's going to be flaky or how it's going to behave? There's privacy implications if that robot is in your home listening to everything that's going on in the home. There's a lot of things like that. Technology challenges, policy challenges. I am very bullish on the 5 to 10 year potential of home robots. I am less bullish on the 2026 potential for them to actually sort of be able to do anything useful in our homes.
And are they having those conversations about that, the privacy and safety too?
They are, and to their credit, I think the industry recognizes that, and there's some people inside the industry trying to tamp down expectations and say, hey, let's not get too carried away here. We've got a lot of problems to solve, technical problems, policy problems, trust issues, and really the only way to solve those is to get the robots in the homes and to start trying to experiment with them, understand in a controlled way what you're going to run across, and then try to just continue to iterate on those problems. So very bullish, 5, 10 years out, but we got a long ways to go.
Would you volunteer to take one into the home right now?
I would not right now, no.
All right, now podcasts are coming into your home. They're coming over, taking over your TV.
Yeah, even the term podcast is interesting, right? We tend to think that, remember when the podcast came out, that was the iPod and the iPod Shuffle and all those kinds of things. We tend to think of it as this audio thing. Now it's maybe more your phone. But really, so much podcast usage is happening on the biggest screen in the home, which is typically in the living room. And so even the term podcast is a bit of a misnomer. Maybe if we do this prediction next year at this time, we'll be doing it as a podcast, right? How is that different than linear TV? Many podcasts, maybe even most podcasts now have the video component component with them.
Mm-hmm.
And if you have a video component and you're watching it in your living room, how is that really different than TV? And specifically think about late night TV, right? That's been going through quite a bit of upheaval economically and otherwise. A lot of people predict late night TV is effectively, it's just going to be podcasts at this point moving forward.
I can believe that. I mean, a lot of the things I catch from Saturday Night Live, I watch as little snippets, as opposed
anyway,
to
right?
a destination
exactly.
on a Saturday night.
Yeah, that's exactly right.
And it's amazing. Technology has changed so much that it allows pretty much anybody to have a video podcast with minimal expenses. I shouldn't be telling people that.
Exactly. Well, I'm not sure the world needs more podcasts per se, but the world does need, high quality content, and especially in an age of AI with AI slop, there's a lot of low quality content. There always has been a lot of low quality content. Now there's even more. So, how does one differentiate? How do you rise above and produce? I think there's still, humans are infinitely curious, and we want to be entertained. We want to be educated, informed. And so, somebody who's got something to say, or two people or a group of people who have something to say, it's never been cheaper or easier, to your point, to start your own, video broadcast, if you will, whether you call it a podcast or not. And then whether you can find an audience for it and sustain it is obviously the question.
Okay, next up, you mentioned it, AI, and please, AI slop. Some of the stuff that's out there right now, it ruins it, because you'll watch something and you go, it's not real. And you think you're actually watching a video that you want to see that's real, and it's not real. Where are we going with AI? Where do you see it heading this year?
Well, AI is pervasive in almost everything, right? It's almost become meaningless. It's like saying, where are we going with the internet, right? The internet sort of governs, it enables almost everything we do technologically. And I think AI is rapidly on the path to doing that as well. I will say physical AI, we've been talking about robots, we've been talking about autonomous vehicles. Those are physical manifestations of AI that have a very different safety set of expectations. It's one thing for my large language model to hallucinate. It's quite another for my autonomous vehicle to hallucinate. So I think what we're going to see is, number one, AI has never been just one thing. There's machine learning, there's natural language processing, there's automated incident detection on videos. There's lots of subspecialties of AI. And so I think what we'll see in 2026 is people becoming a little bit more precise about their terminology. This is not just generic AI. It's AI doing a specific thing in a specific way, whether it be physical in an autonomous vehicle or large language models, or it's helping me process a lot of data and run my business better. I think we just need to be sharper in our language, and I think the industry will continue to evolve. And in 2026, we'll still hear plenty about AI because it's just such a broad term, but the people are going to have to be more specific about what kind of AI.
All right, so we'll talk about this a year from now in a video podcast in our driverless car. But no robots will be cleaning the house at home. Jim, thanks
no robots, exactly.
All right, Jim, thanks very much for joining us. All the best for the new year.
Great, thanks. You too.
Jim Anderson is CEO of Beacon Software. When we come back, we'll dive into some of the biggest newsmakers of 2026, including the ever-evolving trade war.
Hi there, I'm Lindsay Biscaya, and joined with BNN Bloomberg's Andy Bell and Derek DeCluett, executive editor at Bloomberg News Canada, for a look back at some of the big news stories, big news makers of the year. So we'll get started with the first one. Obviously, we can't really think about 2025 without thinking about trade, tariffs, the ongoing kind of trade dispute that Canada has with the U.S. So Derek, I guess I'll start with you. Obviously, many sectors hit hard by this. You don't want to compare one against another, but one of the industries really hit hard was the auto sector. What do you think happened throughout the year to that sector?
So in the middle of March, Donald Trump, in one of his famous Truth Social posts, said he would like to permanently shut down the Canadian auto industry. It was part of the dispute that he was having with the Ontario Premier, and Justin Trudeau at the time was just on his way out as Prime Minister. And this is like one of the big stories to watch in the trade file for next year, because the auto sector is different than everything else. They can't, the aluminum business is not moving out of Quebec. It's dependent on cheap hydro. The trees are not moving out of British Columbia, and the softwood lumber part is difficult to solve. But these are industries where Canada has an inherent advantage. It's Trump's clear goal to try to get as many auto assembly jobs out of other countries and into the U.S. as he can. And with those jobs, to the extent that he's successful, go the parts jobs, and that's a massive issue for Ontario going forward.
Yeah, and we've seen that, right? Especially with like a lot of layoffs, a lot of changes in terms of production at certain facilities in Ontario auto plants throughout the year. I mean, this is a unique battleground when it comes to CUSMA and the year ahead.
That's right. There's 3,000 people at the Brampton plant that is Stellantis Chrysler, whose futures are very uncertain. There are a bunch of people in Oshawa who are still making pickup trucks, but their futures are somewhat uncertain as it's not clear what exactly production will look like in a tariff world. This is a totally different one than the one we're accustomed to.
Yeah, and I mean, when we zoom out and look at the impact of the tariff world, like you talk about, Andy, I mean, the red tape that this has created for small businesses across the country is phenomenal.
I was horrified just researching this segment at the amount of extra paperwork small businesses in particular have to do, because now they have to certify that they meet CUSMA. And it's not just as simple as just filling out a form. All of your components of the thing, we're talking about goods here, not services, all of the components have to be certified. And then when you put this thing together, you've got to recertify the whole thing. And that adds friction and costs, very tough on small businesses. Plus, we had that thing where the Americans got rid of the de minimis exemption, whereby small Canadian firms were shipping to U.S. customers. If the value of the shipment was below $800, they could get it into America duty-free. That's gone as well. So small businesses have been a victim here, I think, in particular.
Yeah, definitely. OK, so I want to talk more about CUSMA in a moment and the renegotiation that we have to look forward to in 2026, what that can mean. But first of all, we can't talk about 2025 tariffs and trade without talking about the number of ads that the Ontario government put out. And of course, the last one that was out later in the year, the Ronald Reagan ad, was very disruptive, you could say. Donald Trump did definitely take notice of that. Before we talk about it, we do have a quick clip of the ad for those who maybe didn't see it. You can hear a little bit of it now. Take a listen.
High tariffs inevitably lead to retaliation by foreign countries and the triggering of fierce trade wars. Then the worst happens.
So Premier Doug Ford standing by this, saying this was the best ad he's ever seen.
It was a smart concept. I mean, and it got under the skin of Ford. It was a brilliant idea.
It was a good, I mean, it's all about Ronald Reagan, one of Donald Trump's supposedly favorite presidents, talking about how tariffs hurt the U.S. economy. Do you think maybe it obviously made an impact with Donald Trump?
May have backfired, obviously, was Trump claimed that he was calling off the talks because of that ad.
Yeah.
But why did it get under the president's skin? Is because it was true. Because Ronald Reagan was mostly a free trader. And of course, that ad is taken from an address where he's trying to explain to the public why he's taken a trade action against Japan many, many years ago, but still believes in the principles of free trade. It was a real hot button.
Yeah. And the idea was to kind of target other Republican leaders throughout the country, get them thinking about it, and maybe go to the White House and talk a little bit more about whether this is the best idea forward. I'm not sure whether that worked or not, but it was definitely a moment this year in 2025 when we're talking about tariffs.
And people, I tried to track whether was there any case in which they distorted the former president's words, and I don't think they did. I mean, obviously, with any kind of clip like that, they took bits and pieces from here and there, but I think they fairly reflected what Reagan had said.
It was mostly in context, yeah. Okay, so looking ahead to 2026, CUSMA, and looking back on the year that just passed, we've got the renegotiation of CUSMA coming up in 2026, that free trade agreement between Canada, the U.S., and Mexico. But first of all, let's talk about, I'm not sure who wants to pick up on like how important this free trade agreement was for Canada when it came to a buffer with a lot of industries against tariffs.
It was, really. I mean, we do have among the lowest tariffs of any country trying to get stuff into America now, apart from steel, aluminum and lumber, and autos have been hit to some extent. So CUSMA has been a major safety factor for Canada in this current trade disruption.
And I think to Andy's earlier point about there's a tremendous paperwork burden, especially on small and medium-sized businesses, but by and large, they went through that. And so more than 85% of what's shipped now from Canada to the U.S. does meet that compliance test. And that's really a big part of the reason why the Canadian economy held up reasonably well, certainly probably much better than most economists thought it would, back in March and April when the trade war was sort of really starting to heat up.
And it may turn out that Mr. Carney, the Prime Minister, has played this pretty well. I mean, it's always hard to know, but after talk of elbows up and our relationship with America is broken or certainly transformed, he then backed down. He dropped retaliatory tariffs. He backed down on the digital services tax. And that led to a fairly small tariff burden on Canada. I mean, it's hard to attribute exact cause and effect here, but it looks like he may have handled it well.
It's hard. Yeah, he's keeping things very quiet, a very small group around those negotiating tables when they were happening. So it's hard to know, but yeah, you can take hints from that. Okay, then let's talk about 2026. I mean, there's the renegotiation coming up. How important is this, that we keep a lot of what the current free trade agreement has intact?
I mean, it's really vital, and of course, there are certain sectors, we've mentioned autos, but more broadly, the manufacturing sector, I think, is one of the most under the gun. I think one of the things to really look for is the Trump administration is being quite vague about what they want, and that's by design. For them, uncertainty, keeping it's part of the Trump playbook, keeping your opponents on their toes, but also, as long as there is this uncertainty, companies that want to invest will be more likely to say, well, I'll just invest in the U.S. because then I'm assured of access to that market. And the more that they can keep a cloud of uncertainty around what's going to happen to Canada and Mexico, the longer that goes on, the harder it is for those countries, our country, to draw investment.
It is going to be hard, obviously, for Canada to build markets around the world. This country's been talking about that for decades, diversifying trade. But America is so much the natural trade partner, if only because of geographical proximity.
Okay, we'll have to wait and see what happens there. Good conversation. Thanks, guys.
Thanks.
Thank you.
And stay with us. We'll be right back right after this.
Canadians have weathered a lot this year, but in 2025, it's workers making the biggest noise, from stalled flights, delayed mail, to empty classroom. Strikes erupted across the country. CTV's Kathy Lee has more.
The soul of Canada's workforce rose to the surface on picket lines marked by tired feet and a demand for something better.
We're striking to keep good service and to keep good jobs. We will be here until we win.
Years of built-up frustration spilling into the streets from coast to coast. A chorus of unrest grounded flights, slowed mail delivery, and emptied out classrooms in Alberta.
We're in a place where we've got a broken system. It's sick. It's been death by 1,000 budget cuts.
The summer of labor unrest begins on August 16th, with more than 10,000 Air Canada flight attendants walking off the job for 3 days after a new negotiated agreement with their employer fell through.
Starting flight attendants now are making $1,900 a month in an area where rent is $2,000.
In addition to wages, at issue, employment conditions, work rules, and unpaid hours.
We're not paid anytime the aircraft is not in motion.
Pay, one of the sticking points behind the 2-week nationwide postal strike on September 25th.
Fair wages, improved health and safety, expansion of the public service, and a right to retire with dignity.
Workers also motivated to go to the picket lines after the federal government announced an end to door-to-door delivery in an effort to save a struggling Canada Post. The disruption impacting many businesses relying on the delivery service.
There's been some delays in sending out packages, and we have had to use alternative services at times.
We've essentially just have lost confidence in Canada Post.
And Alberta teachers losing confidence in the education system.
Why does Alberta, the richest province, have the poorest funded classrooms?
Tens of thousands of educators walked off the job on October 6th, wanting better wages, more support, and smaller classroom sizes.
Having to teach 37 grade 6 kids, it's too much.
We are burnt out, we are broken, the kids are not getting what they need.
Only to be forced back to work 3 weeks later after the province invoked the notwithstanding clause, overriding some rights and freedoms to pass the back to work legislation.
This has been the longest education strike in Canadian history. We were looking for a way to bring some finality to it.
The move galvanized students province-wide to walk out of their classrooms.
We're not walking out because we don't care about school. We're walking out because we care too much.
We care too much to stay silent.
The students here are angry. You could really feel the emotion in the air because their teachers aren't able to strike. They've taken matters into their own hands, and they want the government to listen. They want to be heard.
Pay our teachers and give us the education we deserve because this isn't fair.
An expert says the level of recent labor disruption and strike activity across Canada hasn't been seen since the 1980s.
Workers engage in this kind of labor activism when they've been pushed too far, when they're fed up. And so they start to push back. I think what we saw in the last couple of years is a significant shift in workers' ambitions. They wanted more because of COVID, followed up by inflation. I think that really ramped up workers' expectations.
And although the strikes have caused chaos, public support for workers remained strong, even among hundreds of thousands of stranded Air Canada passengers.
I think it's okay for these guys to keep fighting.
They're asking for the bare minimum, and I think that they deserve what they're asking for.
As for what comes next for the labor unrest, no one can say for certain. But experts believe this year wasn't an end, but a beginning, a workforce finding strength, and a movement that will carry on. Kathy Lee, CTV News, Calgary.
Know Your Options is back. Tune in tomorrow at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. You can email us your questions at knowyouroptions@bnnbloomberg.ca. Market Call is coming up next. Today on the show, we have Mike Philbrook. He is CEO of Resolve Asset Management, and we'll be taking your questions on exchange-traded funds. Well, thanks for watching Morning Markets. I'm Roger Peterson. We'll see you back here tomorrow.